Welcome to Wall Street Confidential, the show. We give you the inside story as to what's really happening in the stock market. And Jim, today in the stock market, it's not a lot of good stuff happening. We're a down day.
We are at the beginning of earnings period. There has never been an earnings period where there was a great rally. I think that people have to understand that earnings periods are cause for consternation because we genuinely believe that things are going to be fine because we didn't get a lot of pre-announcements. But consequently, we are not on good news going to rally because good news means the Fed doesn't have to cut. On bad news means earnings have to be cut. So we're kind of in a and this is not an unusual time. This has been a continual theme, which is why I don't like to buy during earnings season.
I thought we got off to a good start. Alcoa did all right. And they're the unofficial kickoff, right? The official, the unofficial, I don't know, but I thought they did all right yesterday.
It has nothing to do with how good or bad the earnings are. It has everything to do with the season. It's the same thing with tech. Like when I said you want to sell tech at the end of January and buy it back in September, it's just a tough time to make money. And people always try to find a reason why it's tough. And the answer is that we're in an indecisive moment, and indecision breeds selling.
All right, say you were back at the hedge fund, sleeves rolled up, you take your watch off like you're doing a lightning round. Do you step aside then?
They're short.
They short.
They're short, but I won't, remember I've been chastised when I talk about shorting because people feel like that shorting is somehow dirty. Shorting's legal, and people at hedge funds short, and they get loud and short. Just like you get loud and long, people get loud and short. Well, they short first, and both are legal. They're both legal methods of making money.
The question is, why would you be shorting? Is it just because you figured that there's volatility out there and maybe bad news wins out?
We're up gigantically.
That's because we're up. Okay.
We're up gigantically. The market is overbought. That is usually a ripe situation for being short. A lot of stocks, when you have a risk-reward that's really interesting. Alcoa, you mentioned, was a good quarter. But you know what? It's a better short than a long for the moment. Now, why it's just a trade is because private equity will make it so that you'll get killed for the rest of the, say, 40 weeks that are not earnings period.
Okay. Is there a private equity put out there?
Oh, always.
Some get shorts too bad. People say, it's going to get snapped up.
Big private equity put, and Goldfields is a good example. The only area that we haven't seen private equity yet is, because we've seen it in finance, we've seen it in service, we've even seen it in real estate investment. The one area we haven't seen yet is oil and gas. That's next.
Okay. One thing you keep seeing is people announcing, we've hired a banker. You saw Manorcare, you saw Mirren. People hiring J.P. Morgan a lot. You can come out if they're getting a...
Money's cheap.
But is that a staged thing? We say, hey, we can pop the stock.
No, almost everybody.
Are they serious?
As long as the Fed keeps pumping money, you have to believe that you can get a better valuation 3 months from now than now, given the fact that the S&P is at 14 times earnings. Now, the bears hate to hear that the market's cheap, but it is.
So are we going to cede the market to the bears for earnings season or for a while and then come back?
Yeah.
Bears, you got it for a while, but we're going to take it back later. Jim Cramer, Greg Greenberg, Wall Street Confidential.